Welcome back to Market Day Report. I am Scott Shelby, otherwise known as the Cow Guy. Thank you very much for tuning us in if that's what you're doing. If you've been with us all day, I'm going to make sure you get this market information in a timely and an informational manner, and hopefully you stay. Let's take a look and see what we've got going on so far. Let's take a look at corn and the big board behind my big head. Let's take a look at this. We're adding on to the gains. More real estate every time we check in. May's up 10 1/4 cents to 6.42, 3 cents from the highs in corn. July's up 11 1/4 cents to 6.22, and that one is only a penny and a half off the highs. So good going in corn, but if we go out to the D, 6 3/4 cents higher, making a move towards that 560 level. We kissed it earlier in the day. 560 1/4 is the high. We're at 559 right now. How about soybeans? What do we have going on in soybeans? Well, soybeans are what? 11 cents higher in the May. That's 14.30 and a half last there. July's up 11 1/4 to 14.09 3/4. But look at the Novi new crop up 16 3/4. 12.74 3/4 is last, a penny off the highs. I guess we can start talking about $13. That's better, isn't it, right? Let's look at wheat in Chicago, the Chicago wheat. 25 3/4 cents higher, and the May, that's 6.87 is last. 6.87 3/4 is last. That's about 12 1/4 cents, 12 1/2 cents off the highs there. How about go out to D, that's 23 cents higher to 7.25 1/4. Moving over to the Kansas City hard red wheat there. 28 1/2 cents higher. These are much more fun to announce. 8.48 1/4 is last in that May contract. We got a D board of 25 3/4 cents higher there to 8.32 3/4. All right, not bad. Spring wheat in Minneapolis. What's happening in spring wheat in Minneapolis? 18 1/2 cents higher in the May to 8.59 3/4. D is up 17 1/2 cents to 8.58 1/4. And we're going to finish it up and get to our next guest analyst with cotton. Cotton's going to be a little lower by 85 points. That's the front month May. 76.73 is last there. July's off 84 points to 77.35. Let's bring in Todd Horowitz joining us from the phone today. Thanks for being on the line in Las Vegas. That's not bad place to be. Thanks for coming on, Baba. What do you think these markets are doing for us? Where do you stand? I mean, give us your overall view here.
Well, Scott, I think that the action has been really interesting today. When you look at, we were much lower, and then they took off, and then they got, obviously near their highs now. This could be the short squeeze that would I think, bring the rally that we've been looking for. And I think things are starting to shape up that we're going to get that rally, and we may get it sooner than we thought, because I think the action itself today has been extremely strong, especially when you look at where we've been the last couple of days, and then early this morning. Suddenly, we're going higher. I mean, wheat was at one time up like 36 cents, and now it pulled back a little bit, but it keeps coming back.
And that's basically just on the fact of the comments out of Russia. I mean, do you think there's anything else there, or have we just come down so much?
I think that there's a little bit out of Russia, but I think it's they caught too many people short. I think there's trouble in paradise, and there's more trouble with more banks in the equity markets, and I think that money is looking for a home, and I think that at these prices, there isn't much better place to go for an alternative investment.
It seems like we've really backed out most of that inflation trade, and if we do see, say, something like crude oil start to spike again and inflation come back, there are some analysts actually calling for higher inflation. It'll be interesting to see what these products do, because there really is no inflation price at all in all of them.
No, there's been deflation in the grains. I think the inflation rate is going to come back stronger than it was before, and I think it will pump up these products, because I think at the end of the day, these are consumable goods that we have to survive. And I think that they're going to finally push the prices higher, and the weight's going to get lifted off, and the money's going to come flowing in.
All right. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz. He's Bubba Trading, Las Vegas. We'll be right back after this. All right, welcome back. Let's take a look at the proteins, the meats, the livestock, whatever they're called. We don't care. We just want to know the price, don't we? Let's take a look at what the live cattle got behind my big head. Let's see what they're doing so far today. We've got April contracts up 87 cents to 163.02. We've got let's go to D. So that's up 42 cents to 165.47. So a steady a little bit better would be the call in live cattle if you called me on the floor of the Chicago Board of Trade years ago. Feeder cattle, they don't like a higher corn board, so we got a little bit of pressure here, but not too bad. Actually, May's the one suffering. But we've got April down 37 cents to 194.62, and we got May down $1.30 to 197.30. And then lean hogs. How about this one? Let's take a look. Lean hogs, we're higher today. April's up $1.30 to 77.05. May's up $2.40 to 85.75. Let's bring back in Todd Bubba Horowitz. He's on the phone coming to us in Las Vegas. What about the meats here, Todd? Anything look interesting to you?
I think cattle looks fine. I think it's going to continue to kind of try to grind higher. I think hogs bounce today was a natural bounce after such heavy pressure in selling. I think, again, we'll go back to crude oil. If crude oil is lower, cattle will be a little bit stronger than hogs. And if crude oil becomes strong again, I think the hogs will pick up some speed. I do like out the curve into the hogs, and they look much stronger going into the summer. So I would expect to see steady to higher in cattle and a lot higher in hogs once they get started.
Do you think the outside markets are going to cause any problems for us as far as maybe how much extra money folks have, and maybe they'll kind of go down the value chain and look for cheaper meats?
They might, but I think that a lot of people have gotten into the point where they're out of the equity market. I think you can see by the action equity market that a lot of people have already pulled, and a lot of this trade that's going on is more commercial trade, trying to prop it up, to get investors to come back in. And I think that they're kind of preparing, especially with interest rates now. Short-term rates at 4.5%. It kind of makes sense for those people to put their money there.
Yeah, well, and you've got some opportunities in that bond market that probably are going to be a little bit of a safer space for you, because I don't think this banking crisis is over by any means, and we're going to have to.
I think it's only the beginning. If we think there's only 3 or 4 banks, we got to think again. There's probably 300 to 400 banks that got problems.
Well, they definitely did a story last Tuesday, and they said it was closer to 186. But you're right. If that's going to be the number, it'll probably grow. Appreciate you coming on. Thanks for taking the time out. I know you're busy, Todd. Todd Horowitz, Bubba Trading in Las Vegas. I'll bring it back here to Nashville so I can throw it back over to you.